So you're thinking about moving to Gulf Shores, Alabama. Well, today we are at SOUTHSTATE Bank in Gulf Shores with local lender Joey Parker.
Hey guys.
Joey is an extremely experienced local lender in this market. He's number one in the state in loans. He has done, we wouldn't even know how many loans he's done here in this market. But he's so successful. He's so knowledgeable. He actually invited our team over today and did a very informative lunch on various different products that his bank offers that probably aren't offered at other banks, and it's really explained. We dove deep into current market conditions in the banking and lending world to really, make sure that we are staying very informed on what's going on so that we can help you guys. And when we send you to Joey to go get a loan, you're going to know why, because he is really the best in the business. So can't wait to have this interview with you guys. So let's get to it. Hey guys, if this is your first time to the channel, hit the like button, subscribe button, and ring the little bell. That way you can be one of the first ones to learn about the current market conditions in Gulf Shores, Orange Beach, and the surrounding areas. My name is Aileen Fountain, along with my partner Andy Hollis and our entire team. We do videos just like this each and every week just to be informative, just to let you know what it's like to live at the beach. So whether it's 9 days or 90 days from when you're thinking about making your move, give us a call, shoot us a text, email us, set up a Zoom with us. We'd love to meet with you face to face. We get calls, texts, and emails from people just like you every single day, and we absolutely love it. So as I mentioned, we are here with Joey Parker at SOUTHSTATE Bank. He is in Gulf Shores. It's actually kind of called the Midtown area of Gulf Shores. So he's in a great location. It's a beautiful new bank. Of course, Joey's been with SOUTHSTATE Bank for many years. He's been in the lending business for 16 years, but been in the financial services industry for 23. We are going to dive right into some interview questions with him because he is going to share some great information with you guys, and I can't wait to get right to it. Joey, all right. I'm going to brag on Joey for just a second. He is been very successful at doing condo loans. Of course, he does all kinds of loans, and he's got a ton of different products that we're going to dive into some of those products in this interview. But, back in the day, condo loans were extremely hard to get approved. And he found his niche in getting condo loans approved, and still to this day, fast forward, 16 years later, he is still getting condo loans approved, even hard to do condo complexes. He did my personal loan because I was in a unique condo complex that was not easily to get through. Joey did my loan for me, and of course I went to him because I knew he could get it done. So
thank you.
Yeah, absolutely. So even the locals use Joey. So first question, we have gone over this in other videos, but it's really best to hear it from the guys themselves that are behind the scenes doing the loans, and that is, why should you use a local lender that is in this market? It is not because we get a kickback. We do not get a kickback. We just want you to have as smooth of a process as possible. We also want to see you get to the closing table, and when buyers get frustrated with the process or it blows up at the last minute, then they're back mad at us when we tried to tell you up front to use a local lender, and it was because we wanted to save you all that headache. It's not because there was any kind of other reason, like Joey doesn't even you're not even going to take me to dinner.
I'll take you to dinner.
You will? Okay.
Absolutely.
Just kidding. Joey will take
you
me
have
to dinner.
Pay.
Oh, see? So, all right. So, yeah.
Well,
Joey,
you brought up a good point, but sellers get frustrated too, if the process doesn't move smoothly. So,
great point.
We're actually seeing a lot of that right now. And there's a lot of reasons why I suggest utilizing a local person. We'll talk about the condo aspect in a minute, but obviously we have a great relationship. I know all the appraisers in the market. I know all the insurance companies in the market. I know all the title companies in the market. So, having a local, if you take the lending part and separate it out from everyone else that's local, oftentimes you disrupt the chain of communication, which means things just are not going to flow as smoothly as if everybody can work as a team. And working as a team for our clients and providing good service is the ultimate goal. As it pertains to condominiums, a lot of people don't understand that it's not good enough just to qualify for the loan in most cases. The condominium also has a portion. Basically, you have to underwrite the condominium project above and beyond the borrower's ability to qualify. So, and that's constantly changing. Obviously, new budgets and balance sheets are drafted every year. Insurance changes every year. Litigation comes and goes with the wind.
Guidelines from the underwriting changes.
Right. And it's pretty complicated stuff, actually. I mean, when you boil it down and you do it every day, it feels less complicated. But for someone who's out of market, that doesn't live and breathe condo loans on a daily basis, oftentimes those people maybe didn't even know Alabama had a beach, much less anything about the specific condominium project that you're working with. So, they're just you're gonna be on someone's learning curve. Basically, it doesn't mean that they can't do it, but more times than not, they'll stumble. I told you the story about my client in Texas when we had our meeting earlier, and if I can share.
Please do, because he had everybody at the table rolling, laughing at this story.
Well, I developed a really good relationship with this doctor from Texas, and this was a couple years ago, and it took him a long time to find the specific property that he wanted, but after a year, he finally found the property and got under contract. And, just like he said he was going to do, he shot me with his Texas banker. And this guy actually owned a lot of cattle property out in Texas. So, he came back and said, well, Joey, I really like you, and I can tell you know what you're doing, but my guy in Texas is going to be able to give me an eighth of a point better, which that doesn't happen very often, but occasionally it does. And I said, well, all right, I understand. I said, I tell you what, when you get ready to finance some of that cattle property, will you give me a call and give me a shot at it? And he said, what are you talking about? And I said, well, you're going to let a Texas banker finance an Alabama condo, so I figure you might as well give an Alabama banker a shot at some Texas cattle property. And he just laughed, and we had a good time, and I wished him the best. And he calls me back about 30 days later, and he said, Joey, can you still finance some of that cattle property? And I said, really? He goes, no, my guy can't get the condo done. I need you to help me. And I said, okay, well, we'll need another 30 days. We'll have to get another appraisal. You'll have to redo the loan process, but we can get it done. And we did. So,
well, in that situation, the buyer was really lucky because the seller obviously gave him an extension to get that done. Of course, there was another appraisal, was another 30 days, a lot more time and energy and effort.
Sure.
He had to resubmit everything. He had to go back to, start all the process all over with Joey. But ultimately, you can be in that scenario and the seller says, no, I'm not staying in this process with you another 30 days.
And that's happening a lot more right now. As these sellers realize that when they sell the property, they're either going to have to pay capital gains tax, which if you've bought property in the last 5 years, you probably have a nice amount of equity. Mm-hmm. So that's very real for everyone. Or you're going to have to do a 1031 exchange, and then you're looking at a much higher rate. So I'm seeing a lot of sellers, they get 2 or 3 weeks into the process, and they realize they don't know what they want to do with the money, or maybe they just want to keep the property that they have and not worry about the stress of trying to roll it into something else at a higher rate that's not going to cash flow.
Right.
And they end up looking for a reason to try to get out of the deal. So that's happening right now. Seller's remorse is a real thing in our market.
Well, and also, it's unbelievable the amount of cash buyers that are still in this market. So, if you're getting financing, you're competing against cash buyers. So the seller may say, you know what, I'll just get a cash buyer, or maybe they, like Joey said, that they have seller's remorse and decide not to sell it. We still have a very real inventory issue. Mm-hmm. So you do not want to find out 30 days in that your hometown banker that said that they could save you money, and of course they know how to do a condo loan. Right. They do they do them all the time in Atlanta.
Right.
And then you find out that there is this giant thing called the Gulf of Mexico next to this condo, and they like, what is happening down there? There's hazard insurance, there's flood insurance we got to deal with. So you will find it out very late in the game, and it will cause a lot of stress and anxiety and a lot of upset people to save little to no money.
Well, there's definitely a difference between financing a condominium in a resort market versus a condominium that's in more of a primary residence type geographic area like Atlanta or something like that.
Right.
So there are more nuances.
Yes. And Joey has done thousands of condo loans, and he has an in-house team. They all know what they're doing. So, there's so much value there in getting the right, advice, the right instruction, the right guidance, and also somebody who can really help you with the right condo or product in general as far as the loan goes.
Exactly. You mentioned earlier that I've been in financial services for 23 years, and in my prior life, I worked for a boutique money management firm actually in Atlanta, and just decided I want to change pace. So I came down here, and everybody trades in real estate instead of stocks and bonds. So I found myself doing mortgages, but I still try to have that mentality that a mortgage is a financial instrument, and we have to make sure that it harmonizes with the rest of our clients' finances. I'm not looking to be their money manager or their wealth manager, but making sure that we're coordinating with those people to ensure that the type of financing that we offer them plays a part in that process.
And there are a lot of different products. There's a lot of different products that he can do on a condo loan that aren't even necessarily conventional, and he can get outside the box and find a loan product that will really work well for that particular situation, property, buyer, the whole nine. Which kind of leads me to my next question. So I will get buyers ask me this. I know Joey gets it on the daily. What are rates today? What can I lock in for today? What can I get a loan rate for? And that is just too general of a question to be properly answered. And Joey, I'm going to let you dive a little deeper into why that can't be a cut and dry answer.
Yeah, especially in today's environment. There's a huge spread between where rates can be. It's not just based off credit score, because people always say that, oh, I've got great credit. Well, it's not just the credit, it's the occupancy, it's the type of property. It could even come down to where do you live versus where the property is located with certain programs that we have internally that we call portfolio products. So, different borrowers, you can take one person that has a 740 credit score and another person that has a 740 credit score, if you're just looking at credit, and there can still be up to a 2% difference in their rate based on the factors that we just discussed. So that's the importance of going through a pre-qualification early in the process. Even if you're going to qualify, there are certain programs that might be afforded to you that could allow me to instruct a lien on different properties that you might want to look at. For instance, as we talked earlier today, there are some incentives that we're currently offering on higher loan amounts. So, if we don't do the pre-qualification and you come down here and you buy something that's maybe right below where that cutoff tier is, if you taken done the pre-qualification earlier, I could have instructed Aileen, hey, let's find something maybe $50,000 more expensive, then you could have gotten up to a half a point better on your interest rate. So it's not just qualifying, it's the pre-qualification allows you and I to do our jobs better for the customer, and that's our ultimate goal, is to service our customer.
Yeah, absolutely. And so I don't necessarily, need personal financial ins and outs.
I never share any personal financial.
No, and I'm saying for me as a real estate agent, I'm just trying to find the right property based on what you're telling me. Joey, on the other hand, really does need a lot more details on your financial situation. All that information is very beneficial to him to be able to tell you the right product, the right loan, that he can kind of guide you and say, okay, this loan could be a really good fit for you for these reasons. And if he doesn't have that information, he really can't guide you in one direction or the other if he's just going off of some basic information.
That's true. And I mean, people are making important decisions, off of the information that we give them. So I really try to stay away from having those general conversations as much as I can, just because I don't want to give somebody just a general statement and then they use that to make a poor decision.
Yeah, so the more information you've got on all the financial ins and outs of what they're trying to accomplish and what they're working with is very, very good for you to be able to help them.
And I try to minimize the pre-qualification up front as much as I can. I'm basically just looking at income and assets and credit for the most part. But yeah, I mean, in our meeting today, I likened it to, calling your auto mechanic and saying, something's wrong with my car, it's making a funny noise, and the mechanic says, bring it on in and let me take a look at it, and the person says, no, let me just hold my phone up to it and you tell me what's wrong. So you get what you put in out of things,
Yep.
and having that good pre-qualification early on allows you not to do a better job.
Yeah, and the more information that you've got to go off of, the more, the better you can help guide them.
Certainly.
So,
Absolutely.
we're going to, I want to talk about, we're not going to get into the nitty gritty here, but, you've got some great products that you can offer above and beyond conventional products that most everybody has.
Correct.
Why don't you give us just kind of a brief overview on some of that?
So, talking about products that are going to mainly be focused on our market, we of course offer FHA and VA and USDA and a lot of your first-time homebuyer programs. But for the purposes of this, we're more interested in like resort, second home investment property, so we'll concentrate on that. There's three primary ways to go about it. You've got your conventional mortgage, like you discussed, that is Fannie Mae or a Freddie Mac type mortgage. That's your vanilla 30-year fixed that most people gravitate towards. The guidelines on that program are much more restrictive for condominiums on resort markets. It can also vary state to state, so there's sometimes different down payment requirements in Florida versus Alabama. You can quite literally line 4 condos up and your financing would be different, could be different on all 4. Then we have portfolio products, which are our in-bank products. Within that, we've got lot loans, commercial to perm loans. We've got what's called a general portfolio loan, which is not as invasive from a condominium perspective. It's much more concentrated on the borrower's independent ability to qualify. That's what we used for your transaction. And we have professional programs where it does involve a little bit more of a condominium review. We have doctor programs as well. So there are a lot of choices outside of just that 30-year fixed that most people feel like is the best option. We incorporate ARMs into the mix, which is really helpful today in the higher interest rate environment. If you reside in the camp that believes that rates are going to be lower 2 to 4 years down the road, then a 7-year ARM or a 10-year ARM could be a great starting point to save a little bit on the interest rate and definitely on the closing cost, and then just refinance it down the road. There's no point in paying a premium for a 30-year fixed if you're only going to be in it for 2 to 4 years.
Yeah, and I'll be honest, a lot of our buyers in this market, they either have the property paid off or mostly paid off in a 7 to 10 year term, or they have decided to sell and move to the the next category of property that they're moving up, or they're gonna buy a second property because that property is paid down considerably or paid off. So we don't really, there's a lot of movement in this market. You don't see people hold on, especially their first investment property down here. It's normally like a stepping stone.
Sure.
So you don't often see people holding that loan as long as you might in a traditional market.
That's correct. I would agree with that.
Yeah. This is definitely a Joey question. He can articulate it so well. And, we're of course not going to hold him to anything. This is his personal opinion. This is what he sees in the banking and lending world. But, with a couple of the banks failing, I think a lot of questions were circulating on stability in the banking and lending world. Will you give us your 2 cents on that, please?
Sure. I'm going to break it up in different segments. So regarding the bank failures, I think there's a possibility that you see a few more of those, but I think they're isolated incidents. Silicon Valley Bank had a lot of major depositors with tech startups. It only takes a few of those clients to pull money out to get a bank to a tipping point. Some of the other banks were involved in some crypto stuff. So, your banks like mine, SOUTHSTATE Bank, where it's more diversified in our deposit base, it's more customer oriented. It's not going to have as much of an effect if a person that has $10,000 makes a withdrawal versus a tech startup that has $10 billion makes a withdrawal. So your general banking industry as a whole, I feel like, is pretty secure right now. And the stress tests that have to be in place after the mortgage crisis and everything are, for the most part, doing their job and ensuring that big banks are stable and a good place to keep your money.
Yeah, awesome. It's very comforting to hear that from somebody who is entrenched in the banking and lending world. Joey, I know we talked about this today. We are seeing a lot of high net worth buyers that aren't showing any fears of buying real estate right now.
Correct.
I mean, I know I just put a $2.1 million property under contract, and I think we're seeing the higher price stuff is moving more than the lower price stuff. And I mean, you agreed with me there?
Absolutely, 100%. Your higher interest rates have put more pressure on that lower part of a borrower's ability to qualify. Your higher net worth clients that have money in the bank, you could actually make argument that it's a better time to borrow today than it was 18 months ago. And that, as odd or ridiculous as that may sound, if you look at it, you were getting, maybe if you were lucky, 0.5% on your money, 2 years ago. You might have gotten a 4% rate, but you're only getting 0.5%. Versus today, there's investment vehicles out there, 2-year treasuries have been right at about 5%, and if your rate is, let's just say, we'll kind of hit middle of the road and say 6.25% or something like that, then you've only got a spread of 1.25% versus a spread of 3.5%, based what you're getting for your money versus what you're paying for money. Right. So that's what I'm hearing a lot of my clients say right now is, if it's such a small margin between those two, and you take into consideration the tax deductibility of the interest if you're going to rent the property, it's almost free money still.
Right.
But you just have to dial into it and recognize that fact.
Yeah, recognizing that fact for sure, because Joey brought that up today, and I really had never thought about that. I'm like, he is so right. Mm-hmm. And obviously the higher net worth, higher price buyers understand that fact, and I think that's why they're buying up these properties.
That's right.
I had one final note. So Joey and I've talked about this in other videos on why I do not, a lot of people are saying, well, I'm going to wait on the sidelines. I feel like prices are going to come down. I'm going to just wait and see. All these type of sentiments are fine, and I'm not telling you what to do. If your gut feeling's telling you to wait, prices are going to come down, that is fine. You should certainly do that. But what I have been telling you is that don't be so certain that prices are going to come down, and I'll tell you why. We still have an inventory shortage. We still have an inventory in a lot of different types of inventory, especially properties in our market. And here's the philosophy of it. If you're locked in, it doesn't matter if it's a vacation property, second home, primary residence. If you're locked in at 2.5%, 3.5%,
sitting on a lot of equity.
You are sitting on a lot of equity, but why are you going to give that rate up? If it's a rental property, you're probably killing it on your ROI because of that low interest rate, and the rental rates have been great. Rentals have been great, so you're paying down that note even more. Plus, you're locked in on that super great rate. If you're in a primary, unless you're just relocating or you have to move up, you're in a small house and you got triplets on the way, you have to get a bigger house, you're not going to leave that rate unless you just absolutely had to, because now you got to turn around and buy that bigger property. Yeah, you've got equity, but you're going to have to buy it at a 6 and a +% interest rate when you're locked in at 2.5 or 3. So people just aren't going to do that. They're certainly not going to do that in high numbers, which is going to continue to put pressure on inventory because buyers don't want to let go of that rate. Joey made an additional point on that. Mm-hmm. Joey, let you tell additionally why.
I think there were maybe two things we talked about. Yep. The tremendous population growth of the southeastern United States, and it's I can't remember the exact percentage, but I believe it was 60-something percent.
I've talked about that in another video as well.
And move out of state, move to the southeast. So our regional metropolitan cities are growing and putting that many more people within driving distance of our beaches. And that coupled with the fact that a lot of people just want to live here now too,
yep.
With having the remote opportunities to work. But I believe that there's, everybody talks about herd mentality,
right.
and timing of the market and things of that nature. And I hear it every day, and I'm sure you do too. People would love to have a condo, but they just haven't come to grips with the change in interest rates yet. So a lot of people out there say, well, I'm just going to wait until rates come back down. and that's when I'm going to buy. And I think there's a lot of that demand that's sitting out there, and I don't think that it's something that people are really paying attention to and what kind of an effect that could have on things. Because yes, I mean, because of what you said, our market has definitively proved that it has stabilized, and our values are remaining stable, if not going up still a little
Absolutely.
bit, right? So, if you buy right now, yes, you may have to refinance down the road, but you're going to catch all of that upside. When all of those people that are saying, I'm going to buy when rates come down, when they do come down and all of that money floods to the market, you're going to see a frenzy. You couple that with the lack of inventory that we've discussed, plus all these people coming in the market at the same time. I mean, I'm not going to put a number on it, but I think values are going to go up substantially. And the difference in you being able to gain all of that pop when it happens, and the cost of having to refinance the property, not to mention the intrinsic value of being able to enjoy it and receive income off of it during that period of time, I still think now is a great time to buy.
Such an amazing point, because he's right. I mean, there is going to continue to be pent up demand, and there's going to continue to be an inventory shortage. So, if you did see a time where rates came down and inventory went up, that pent up demand is just going to explode and drive prices right back up.
That's right.
So he's absolutely right. I mean, if you went ahead and just bought now, and trust me, he's got some products that he can save you money on the rate. You just got to call and talk to him about your particular situation. So that could be a moot point anyway, because he may be able to save you some money on the rate on some of his products. Right. But say you go ahead and buy now, and rates do come down and you refinance later, well, now you don't have to deal with the continued inventory shortage, the potential of another boom if there is this pent-up demand, like what he's saying, which I think is very plausible that could happen and will happen. So, yeah, I mean, at the end of the day, now is still a good time to buy. In our professional opinion, I'll always follow what you think is the best thing for you and your family, but that is certainly something that he and I are both in alignment on what we're seeing in his everyday day to day and my everyday day to day. So
that's right.
Joey, anything else you want to add?
I don't think so. I mean, we've covered a lot of topics today.
We have covered a lot, and trust me when I tell you that we could do about 4 more videos on the information shared at this table with our team at lunch, and so we will probably be bringing some more videos to you. Just too much to cover in one video. So that's going to just about do it for today's video. We hope you enjoyed the content. Remember, if this is your first time to the channel, to hit the like button, subscribe button, and ring the little bell. That way you can be one of the first ones to learn all there is to know about the beach. Living at the beach, vacationing at the beach, buying investment properties at the beach life. Be sure to check out some of our other videos, and until next time, we hope to see you around town.